Good afternoon. Whiskey is for drinking and water is for fighting is a quote often attributed to Mark Twain. While we agree that whiskey is for drinking, we believe that water is for investing, not fighting. I'm Tom Sullivan, Managing Director of Capital Markets at Farmland LP. In today's webinar, Craig Wishner, our founder and managing partner, will be discussing why we believe water has the potential to generate attractive long-term returns for investors. We're also going to discuss the challenges of investing directly into water and how farmland is a path to owning valuable water rights. We will be fielding questions at the end of the presentation today, and you can submit a question by clicking on the Q&A button at the bottom of the screen. We'll do our best to answer all questions today, and for those that we don't get to, we will respond via email after the webinar. So before Craig jumps into the water here, a brief introduction of Farmland LP. We will be making forward-looking statements today, and we'll be happy to respond to any of those via email and questions after the webinar. A little bit about Farmland LP. So Farmland LP is an investment fund, and we invest directly into farms in North America. We buy conventional chemical-based farms, and we convert those to organic and regenerative farming. Two goals in mind. One is to increase our cash flow per acre and per farm, and also increase and gain the appreciation above market appreciation of the land through that conversion. It really happens in four different steps. First, we buy good quality farms, and we use a criteria we call sunshine, dirt, and water, which Craig will cover here in a second. After we acquire the farms, we then go through a 10-year planning cycle and decide how we can convert those conventional, generally commodity-driven farms to higher value organic and permanent crops. Then, as an operator of those farms, we look to optimize our margins and our management of those farms. We do things like rotate crops, plant cover crops, etc. All things, again, that are used to generate both higher cash flow and have a significant positive environmental impact on our farms. And unlike a lot of farmland managers out there, we're actively managing these farms through our term of ownership. What's very common in the farmland sector today is an investment firm like ours will buy that farm, lease it back to the farmer, and really have no involvement in managing or controlling the returns and the risk on that farm. We take a very active management of those farms through our 55-person farm team. Next slide. We've been focused on the same strategy for 15 years at Farmland LP. Today, we manage about 300 million of assets, which is over 18,000 acres, and we have a 15-year track record of success. When you look at the map on the right-hand side, you can see we're centered today in three geographical regions: Northern California, the Willamette Valley of Oregon, as well as Walla Walla, Washington area, and the Eastern Washington area. Each one of those areas has approximately 100 million of assets, and that's one of the key strategy points we have, is to make sure we're managing a large area of farms in one tight geographic area to take advantage of economies of scale and the management that we have there for the farms. 12 of us on the fund management team, of which I'm one of the 12 members. And as I mentioned briefly, we have a 55-person farm management team, Green Springs Farms, that's on our farms every day, managing the crops that we grow and also managing the tenants that grow on our farms. So when you kind of look and say, what's happened in 15 years? What achievements have you been able to achieve? Very simply, if you look at us as a landlord, by going through this conversion process from conventional ground to organic, we've proven we take rents from $300 an acre to $750 an acre, and that number is going to $775 and $800 in the future. Simple conversion to organic, you more than double the rents that you can charge in the market as a landlord. When we go through development projects where we're turning row crop ground into permanent ground, for example, we can drive revenue from as low as $1,000 an acre to over $20,000 an acre after that conversion process. Today, when you look at the 18,000 plus acres we have, zero vacancy on our organic land. So we know that the strategy we're deploying is one that's in demand. And we'll talk a little bit later about our Fund 3 and our strategy to acquire additional land to satisfy the demand that's out there for organic and regenerative land. So with that, I'm going to turn it over to Craig. I said he's going to jump into the water here and talk about how we view it as a strategy and an investment opportunity for investors.
Great. Thanks, Tom. Thanks, everyone, for joining us today. We are going to talk about one of my favorite topics, which is water. Normally, we don't talk about it too much because it's a little bit complex. We're going to go through as much about water as we can in the next basically 45, 50 minutes. And hopefully, this will bring everyone up to speed. And if you have any follow-up questions, we're glad to ask either at the end of this presentation or in the future as well. So to start, I want to get you covered on kind of what is it about water, and why does Farmland LP know anything about water? Well, 70% of the water used by humans is actually used in agriculture. And water is one of the three key ingredients in the meritage that is farmland. So when we think about farmland, farmland really is the combination of three key factors. One is, and we say sunshine, dirt, and water. So sunshine is a great growing climate. Dirt is high quality soils that may be growing low value crops today, but have the capability of growing much higher crops. And that third component, that third ingredient is water. And that's both the physical access to water as well as legal ownership over that water. So we're going to be talking about water rights and water in this presentation. And we really spend time to value water for each purchase that we do. We're not only valuing the land itself, but we actually value the water. So let's take a step back and look at water overall. On the one hand, you look around and you see the oceans around us, and it looks like there's a tremendous amount of water that's on the earth, and that's kind of true, except the only water that's really we can use is actually fresh water. That's only 3% of the water on the planet. And the vast majority of that is actually stuck in ice caps and glaciers. So only 29% is remaining there. And then the water that's actually available to us is divided between lakes and soil moisture, basically serving the environment, providing us with trees. So trees give us oxygen, fish, we get freshwater fish for food, etc. And ultimately, we only have available to us 0.007 of the amount of water on the planet. And that's what we have to use for everything we consume, and agriculture and industry and sanitation. And again, agriculture is the primary user, the 70% user of that fresh water. And it's not like there's an extra abundance of water. We're using all of the water that's available to us, and it's actually constrained. Here are some headlines from recent headlines that talk about how limitations on water actually cross or both domestic and internationally. You can see a wide diversity of sources that are there, and the constraints on water both today and looking into the future are pretty severe. Let's quantify that a little bit. So if you think about kind of precipitation and rainfall, we just recently had a record level of abnormally dry conditions across the United States, basically drought conditions on 87% of the country. And you see the map there that shows that especially in like the large food growing regions or large farming regions in the Midwest are really having some serious droughts. We actually our farmland is in the Pacific Northwest primarily, and you see that's actually not an area that's in the drought. So this is precipitation and rainfall. There is backup for this. Whoops, sorry about that. There is backup for that, and that's groundwater. So there's aquifers in the ground. We can draw that water out. Unfortunately, there's a finite amount of water in that ground. That's essentially kind of the bank account. The rainfall is living off the income. That aquifer is basically a bank account, and we are drawing down those bank accounts very, very quickly. What this map shows is that there's a declining wells. Basically, the wells are getting deeper, that they're having to go in order to pull up the water, and that's across most of the United States. A little bit positive in Nebraska and South Dakota, and then the wells are at record lows also in a lot of places. So we are really drawing down our natural resources, and that's a bank account. Once it's gone, it's gone. This shows regional water stress across the different geographies, a little bit different than drought, but it is that true kind of water stress. And this chart right here shows falling water levels across the Agua aquifer. Already, in the 1960s, basically, water was at about 100 feet in depth. Today, it's at 180 feet. You're having to drill down much farther in order to pull up that water. And a lot of areas in this lower picture are actually depleted. So in Kansas, this is just a picture of Kansas, there's certain areas that literally have depleted the water from the aquifer. They're no longer able to irrigate those crops. And what that results in is basically you're converting farmland from irrigated farmland into non-irrigated farmland, which has much lower productivity. And you see these declining corn yields over time for Kansas. It's this is happening now. It's not a future thing. So let's talk about water as an asset class. So the first thing to understand about water is that there's actually two components when you're looking at water as an asset class. Number one is that there's the water right, and that is the long-term asset, the long-term ownership of that water, and it's similar to, for example, owning a building. The second component is that annual water that you get from that water right. That's that annual production, and that has a cash flow associating with it. So water rights are your asset, and that right to a certain amount of water, that's what generates your cash flow. When we're talking about water, especially at these large scales, you're generally talking about a measurement called an acre foot worth of water. And so what that basically refers to is 1 acre, which is the size of about of a football field. And if you basically fill up 1 foot deep of water over that entire football field, that's an acre foot worth of water. So imagine standing in, stepping through an acre foot of water across a football field. That's a lot of water. It's actually about what could serve 2 households of 4 for a year in the United States. So it is a lot of water. When we're talking about agriculture, we generally need 3 acre feet in order to grow 1 crop each year. We'll talk more about that. So that first component, water is a property right, and this is really crucial to understand. So. And it actually goes back to the level of the state constitution. Each state basically determines whether water and mineral rights are private property right or if they're owned by the state. And west of the Mississippi, basically water is entirely a private property right. What that means, just like owning a house or a piece of land. What that means is that the state can't actually take it away without just compensation. And if you own that water right, you own it and control it. You get a certain amount of allocation, and the state is really limited for how involved it can be in terms of the management of it. So what are water rights? There's basically 3 kinds of water rights, riparian, appropriative, and groundwater. So riparian is basically the ability to pull water out of a river. Riparian means essentially riverbanks. You're pulling water out of a river, and you get basically the unlimited ability to use an unlimited amount of water for beneficial purposes. So farming is a beneficial purpose. What you can't do with a riparian right is bottle it up and sell it or export that annual water. There can be special legislation, such as creating a water bank or a water market, where you can do that, but that's really a separate level. During the California gold rush, a second kind of water right was really created, and that's called an appropriative water right. The simplest way to think about it is that these miners during the gold rush would have their mines. They'd be mining out rocks, and they needed water in order to be able to kind of flush out the gold from that. And they would pipe it a long distance. And so what that created basically for them was this right to pump out of a river a certain amount of water, a certain number of acre feet per year for their use. That became the appropriative water right. Those are rights that they can sell or transfer. You can actually bottle that water and sell it off to someone else. The key thing in California, now each state manages water differently. So just sticking with California for a second, the key date in California is 1914. So the state of California was founded in 1850. In 1914, the state said, oh, you know what? We don't have any control over the water rights in the state of California. So the state of California passed the Water Commission Act, and all water rights after 1914 are junior to the state of California. The state of California basically said, we own all the unallocated water, and we'll give you permits to use water after that, but you're subject to our control. Well, the people who already had water rights, who were already using water, such as farmers, basically are senior to the state of California. So when you hear, for example, there's a drought in California, and the state curtails the water use, what they're doing is they're curtailing the water use for all the junior water right holders so that the senior water right holders get 100% of their water allocation. So this seniority is really important, and it's a key thing to look at when you're looking at water rights. And again, each state is different. 1914 is a California issue. Oregon and Washington have different issues. The final kind of water right is groundwater, and that's just actually a mess. And we can talk about it, but it's very idiosyncratic. They're just passing, or they just passed something called SGMA in California to deal with the water rights, and it really is a mess. To give you an example of that, just looking at mineral rights, you might be familiar with oil and gas rights here. So this picture on the right here. But if you also think about water being there, so you have mineral tract A and mineral tract B, but they're all going into the same water source. So two users of that, who gets the most amount of water? Basically, the first person to use the most amount of water is the one that essentially wins from that groundwater. And what that results in is people basically trying to use as much water as possible. Bugger thy neighbor causes the need to drill much deeper wells, which is why you see the groundwater issues, the groundwater levels declining so rapidly. So it's quite a mess. It's quite challenging. The Colorado River, for example, is pretty over allocated. So they allocated more water than people have contracts to more water than actually flows through the river. So that's a problem over there. But other water rights in the Pacific West and Pacific Northwest are actually really well allocated and actually often run at a 100-year sustainability plan. So they are managed well there. let's go back to kind of mineral rights versus water rights. Oil and gas rights, all kinds of minerals can be traded separately from the land. They're often traded on exchanges, and so they're priced daily and easy to value. There's commodity standards for that, and these markets are just highly liquid and highly efficient as well, with clear pricing. Water rights, on the other hand, often almost exclusively, there are differences, almost exclusively trade with, are bought and sold with the farmland, and they're rarely separated. There's no real formal U.S. market for buying and selling water rights. And as a result, the water rights market is really inefficient, but that actually means that there's a lot of opportunities to buy this land. We often, when we're buying farmland, we're valuing the dirt and the water separately. We often feel like we're buying the dirt and getting the water for free on it. So there's really a lot of opportunities in certain markets for this. And to echo that, here's some information around the inefficiency of these markets. It might be very easy to price crude oil across the United States. You can buy a barrel of oil for $67 a barrel. But when you look at water, these are just counties in California, or water districts within California, and you see a vast range of different prices, ranging from $200 per acre foot worth of water up to $1,800 per acre foot worth of water. It's very idiosyncratic. It also changes whether there's a drought or not, with prices significantly increasing when there's a drought. So that results basically in a 9-fold difference between Sacramento and San Francisco for the water rights, just using this example. When you think about what the ideal characteristics would be of investing in water, you would want long-term ownership of a high-quality asset. You wouldn't want it on a spot market that has a lot of volatility, with the risk of essentially buying high and having to sell low. By owning that, you would get good inflation protection. You want to invest in a good vehicle that has inflation protection in there. And that goes to the next point, which is that you want to own the real asset rather than own some contract that might get repriced every 12 or 18 months on that. And you also generally want to focus on owning that water right as opposed to adjacent markets or technology. There is some room to invest in drip irrigation systems and things like that, or companies that specialize in that, but those become more kind of tech companies rather than owning that real water right. And if you actually look at the relatively limited options that are available on the public markets for investing in water, you have things like the NASDAQ Water Index, which I'll talk about in a second, funds that invest in infrastructure and technology, and there's also the Australian water market, which we'll talk a little bit about. The NASDAQ Velas California Water Index is the only basically publicly traded market that we're aware of to invest actually in the flow, basically the price of water. It's a contract for buying water basically the next year. It's highly volatile, and it really only represents this small little geography in California. And that's the only price of water that it's reflecting. And what you can see on this is that the water price per acre foot worth of water ranges from $180 per acre foot up to over $1,200 per acre foot. And you certainly wouldn't have wanted to buy the water at $1,200 an acre foot, with the very next year it dropping back to essentially around $1,800 or $180 per acre foot. So lots of volatility if you're buying that acre foot worth of water. The value in this is that if you own the water right, generally it's priced it assumes a price that's that lower level. So you can buy it at a very good valuation and then benefit from that future volatility. Another example of investing in water in the U.S. Is there's several essentially public companies and one private fund. American Water Works is a public utility that provides water and wastewater services. Uh, First Trust invests in water infrastructure, technology, and utilities, again, kind of adjacent to actually water. And then Water Asset Management is an interesting fund. They invest globally in companies and assets that ensure water quality and supply, and they have both public investments as well as private investments. So they do actually invest in water resources and farmland in the southwest part of the United States. So that's kind of an interesting hybrid from that perspective. The the Australian water market, about 25 years ago, Australia basically restructured their entire water market, actually, in one very large basin that represents around 1/7 of the land of the Australian continent. So quite a big area. And what they did is they created a water market. So they aggregated all the water rights. The people who had water rights basically got credits for the number of acre feet that they had. And that allowed people, this water market allows people to actually buy and sell their water rights and have it allocated to the highest and best use across Australia. And it's been a very effective plan. It's benefited environmental sustainability. It's benefited the allocation of water. The price per water for water has gone up. And if you look at the right-hand side of this chart, the red line is water storage. In some years, you have very high amounts of water storage in the system. Then the price is actually quite low per acre foot when there's a lot of storage. But when there's a drought, when that storage level goes down, you see the pricing increasing as well. What this has done is rationalize the price of water rights, generating nice cash flow, but it's also incentivized the creation of additional storage facilities as well for water. So they're actually storing more water, also because of a price that for users of water, people are being more efficient with the water that they use. So this has been in place for about 25 years. We expect in the future water markets to come to the US, most likely starting in California. But that is in the future. That's a potential future upside. But there is this gold standard example of water markets in developed country. So one of our favorite ways of investing in water is actually through farmland, because 70% of the water in the U.S. Is used in agriculture. We have some good company here. So Michael Burry, who is famous investor from The Big Short, has identified several years ago. He basically said that transporting water, so water is an incredible asset, but transporting the water is impractical for political and physical reasons. And so he didn't want to go through and buy up a whole bunch of physical stuff. But what he says, what became clear to him is that food is the best way to invest in water. And so buying farmland, generating food is a value-added product for water. And there's a number of different ways to add value. And buying farmland gives you access to some of the most senior and secure water rights. Agriculture was often the very first use of water as the U.S. basically expanded to the West. So large amounts of farming wheat and other crops, that became basically the very earliest large-scale water rights that were established. And that seniority lasts to the present day. And so buying that farmland today, you're basically getting those senior water rights along with it. So how do you generate returns from that water? So I'll go through some numbers, but each acre of farmland generally has about 3 to 4 acre feet worth of water rights associated with it. It takes about 3 to 4 acre feet worth of water in order to grow one crop each year. In our case, most of the farmland that we're buying, the water is free. We have the right to pump an unlimited amount of water from the river at no cost. We do have to pay the cost of pumping that water around, and roughly it's around $12 per acre foot for the electrical cost to pump that around. We also put in solar as well, which basically makes us net zero on our electricity, but still has some capital cost associated with it. So let's talk about the different ways to, you know, how does basically you take that water right and convert that to revenue. So a very simple way, kind of standard lease rates for farmland are around $300 an acre. Well, there's 3 acre feet worth of water, $300 an acre rent. So that generates around $100 per acre foot worth of water on that, and just simply from rent. Now, when Tom mentioned that we buy farmland that generates rents of $300 an acre, take it through that 3-year organic conversion process and get rents of $750 an acre and more. And so that turns that $100 per acre foot worth of water to around $250 per acre foot worth of water. Nice increase there. Sometimes the ground is suitable for high value crops. So things like blueberries or nut trees or fruit trees and other kinds of higher value crops. And there you can get around $400 per acre foot worth of water, around $1,200 per acre. If you farm even higher value crops, you can generate around $3,000 an acre, so $1,000 per acre foot. And if you sell that water to cities, cities generally pay around $1,000 to $1,500 per acre foot in a normal year, and even higher in droughts. So oftentimes the farmland that we're buying may not currently have the capability of selling to cities. We do think that that's kind of a nice upside for the future. It's some optionality for the future. But today we're glad to buy high quality farmland, growing commodity crops, generating rents of $300 an acre, and then take it through all these other value added steps with the eye at some point in the future that water is going to be worth even more. So our general fund strategy is to acquire high quality farmland with great water rights, add value to that farmland, and then actively manage that farmland year over year, and really give a nice diversified portfolio of farmland. Today, we're growing over 40 different crops, or 40 different crops grow on our farmland between us and the farmer tenants that we work with. Great economies of scale in key hubs and key areas that we see are going to have very stable water both today and well off into the future, even assuming some changes that are going on in that. And we're targeting very reasonable low debt level IRRs of around 12 to 13% on the fund, all while doing a lot of positive improvements to the land, increasing biodiversity, water, and soil carbon. Soil carbon is one of the wonderful things. If you farm well, you use cover cropping, that increased soil carbon basically acts like a sponge for water compared to normal dirt or sand. And that sponge, that soil carbon sponge in the ground, holds a tremendous amount of water. That's great for during droughts when there's a lot of water that is able to be held by the soil that the plants can access. And in the case of too much rain coming down too quickly, it allows the farmland to absorb it. And there's lots of nice channels basically in that land. So you're preventing basically runoff and erosion on that. So a lot of benefits to the kind of healthy soil biology practices that we use. Here's a quick example of an actual farm that we purchased. It happens to be in California. Again, we have farmland in California, Northern California, Oregon, and Washington. This is a 150-year-old farm, so our water rights go way back to the beginning of the formation of California. 4,000 acres, a nice size, but it was farming the exact same 3 commodity crops for 50 years. Farmed by 2 tenants. And you see over on the right-hand side, basically they were growing 2/3 of the land in alfalfa, 25% of the land in industrial corn that basically got turned into ethanol or shipped to feedlots, and then 5% of the land growing industrial tomatoes that got turned into tomato paste for pizza sauce, basically. And so we bought this property, bought it for around $30 million. Today, it's worth over $90 million. When we bought it, none of the ground was organic. Today, over about 3,000 acres are certified organic and in permanent crops. We took it from 3 conventional crops, really increased the diversity to 12 diverse crops today. Went from 2 farming tenants to 7 different farming tenants today, with us growing one of those crops, and increase the revenue per acre from a little over $300 per acre to over $800 per acre on that land. And that number is going up. So on the right-hand side, you can see all these different crops. We do grow the organic blueberries ourselves, and all of the other crops that are grown here are leased out to farmers. So there's both annual crops as well as permanent crops like olives and almonds are growing on this land, and we get a nice revenue share on the olives and almonds as well. So we'll get around $1,100 an acre at maturity on that, and the organic blueberries are going to be $5,000 to $10,000 an acre net on that at maturity. So a very large increase, through better management, same amount of water, we're able to significantly increase the returns from this farmland by converting it to organic, and have that long-term option of that high quality senior water rights. This is actually a great time to be buying farmland. The increase in interest rates has really impacted some of the funds. Some of the best assets we've ever seen are on the market today, and we've been able to actually acquire a couple of great properties at great prices because of this. And so we're basically thrilled with what we've been able to do so far in Fund 3, and we're continuing to raise a little bit of capital in Fund 3. Here's some quick summary of the terms. We're raising up to $250 million. It's structured same as Fund 2, so it has a corporate blocker. You don't have to worry about K1s. You just get a 1099 div when we do cash distributions on that. Minimum investment is $100K for accredited investors and $1 million for institutions. It's a 10-year fund with 2 one-year optional extensions, and we're targeting a 2.5 to 3x cash-on-cash return on that. Management fees, 1.75%. We do not charge any other strange fees like acquisition fees or disposition fees or loan fees or leasing fees or anything like that. And then there's a 6% annual preferred accruing return. We have to return 100% of the capital. We have to return that 6% per year preferred return, then 100% of your capital back, and only then do we participate in the profits of that, 80% to the investors, 20% to the GP. So we're very aligned in terms of the success of that fund. So last slide, just to wrap it up, Farmland LP, it is buying farmland itself, but with a very strong emphasis on water. You're buying water rights at the same time that you're buying farmland. And the water rights are intrinsically tied to that farmland value. We're very price sensitive in terms of what we pay for that water. And we're finding that we can get just really incredible deals on both buying the land and getting those very senior water rights. We invest in great infrastructure like drip irrigation systems. We have those senior water rights, and that regenerative farming, that sustainability of that farmland is really integral to what we do. That actually adds business value as well as is just fundamentally important to us. And that was the last slide. So that was a quick overview of water. And there's lots more that we can discuss. But Tom, let's see what kind of questions we have.
Yeah, a couple of questions came up, Craig. First one is, we talked about senior water rights. Generally, a question about if you buy those or have those, can you transfer those senior water rights to another piece of land or another owner?
You can move water rights around, and you can also sell those water rights to other people. There are so we often what we sometimes will, if we have some non-irrigated ground, then we can actually rotate our water rights that we bought with one particular property and actually kind of reallocate that water to help with our irrigated crop rotation. You can also sell those water rights to other parties as well. So they're just private transactions as opposed to having any kind of public market associated with it.
Craig, we touched on groundwater very briefly, and there was a question on within California. Isn't California working to meter and restructure these groundwater rights through the SGMA, particularly in the Central Valley?
Yes. So Sigma is, there's a lot of regulation within Sigma, which is a groundwater management program. Each essentially water basin needs to come up with a sustainability plan for the use of their water. All of the current users basically get impacted by that. Some people, some groups, some basins' water plans have been approved. Some of them have not been approved, like they've actually been rejected, and some are still working on it. It's just very idiosyncratic. It depends on that specific region, and it basically forces people with adverse interests to work under one specific program, and it's just complicated. There is some value to those water rights, but that's extra complicated compared to kind of normal senior riparian water rights or appropriative water rights.
Craig, just a quick question that was posed on, are we buying typically irrigated land or non-irrigated land?
Almost all the land that we're buying is irrigated farmland. Yes.
There's a complex question. I'll break it down, but basically, as we buy the farmland and we convert it into organic and regenerative practices, do we extrapolate the financial metrics or ratios that are correlated with reduced water usage and increased soil health, et cetera, as opposed to just an increase in gross margin per acre? Like, are we measuring that and using other metrics or just gross margin per acre?
We definitely report each year on environmental metrics as well. Water efficiency is important. It lowers our operating costs. It also presents the opportunities, for example, when we're switching from hot water intensive crops to lower water using crops, that can actually be a positive for a number of reasons. In fact, in Fund 2, we have a property that has 1,800 irrigated acres out of 6,000 total acres, and we're converting that from essentially corn, which uses, again, 3 to 4 acre feet worth of water each year, into some of it's going into wine grapes. Wine grapes only use 1.5 feet worth of water. And so we actually can convert that each acre of corn land into 2 acres of vineyard land. So we're getting basically 2 acres of vineyard land from each acre, increasing the total number of irrigated acres while using the same amount of water. Also, wine grapes are much more profitable than corn as well. So we do look for a number of different ways to farm more efficiently, use water more efficiently, such as converting from flood irrigation to drip irrigation. And we do report, and it's important to us on the environmental side as well.
Greg, there was a question with regard to somebody I think saw a recent press release on Microsoft and wants to know, what that's about and what carbon registry are we using? Carbon credit registry.
The carbon registry is Vera on that. You can talk to Owen in our group if you want some additional details on that. We're thrilled that Microsoft has invested with us. Again, this is Microsoft corporate investing from their balance sheet, from their billion-dollar climate innovation fund. And they're an investor shoulder to shoulder with other Fund 3 investors on that. And the only kind of benefit that they got from investing with us is the ability to purchase our carbon credits that we generate from our regenerative agriculture practices. Now, the benefit for them is that they get additional carbon credits. The benefit for us is that we now have a customer, direct customer, to buy the carbon sequestration that we do every year anyway. And so it's really great to basically have that as a very clear additional revenue source for our funds now. And again, we're just thrilled that Microsoft has invested with us.
And Craig, there were a number of questions. I'm going to put them all into one with regard to maybe a better explanation of how the 6% preferred return works. Is it paid in cash? Is it accrued? And also how the 80/20 incentive fee works for us as well. We need to go over that one more time.
Do you want to answer that, or do you want me to?
Go ahead.
Okay, great. So the 6% preferred return, basically that affects basically when we get paid a carry, our profit interest on that. So the very first kind of source of return for the investors or bucket for return is that 6% per year preferred return. Doesn't mean we're going to generate 6% cash per year, but when we do, we want to distribute that, and that accrues over time. So over 10 years, for example, that would be 60% preferred return that we have to pay first. Then we have to return 100% of the capital that you've invested, and only then do we start to look at an incentive payment for us for generating profits on that. And then those profits are distributed 80% to the investor, 20% to the GP. Was there a second part to that question, Tom?
I think you covered it.
Okay, great.
Related question, no, I think as we went through the presentation, are the returns that we're providing shareholders just from water, or is it the whole farm performance, and will we borrow money on land if interest rates go down?
Great. So investors invest in the fund. They get returns from all sources. There are two primary sources of return. One is land appreciation or asset appreciation, which would include the land and the water rights that are there. And then the second component is the cash flow that's generated from those assets. So whether we're leasing the land to tenants or farming the crops directly, that cash that's generated out of it will be distributed on a regular basis to the investor as it's available.
And a couple of questions, Craig, on the status of Fund 3. Where are we in the fundraising acquisitions, and when do we anticipate closing Fund 3?
Great. So we've raised already over $85 million in Fund 3. We've already completed two wonderful acquisitions in there and deployed over $70 million of that capital. So that fund is going. The most recent property that we bought, for example, was purchased 15% below the most recent appraised value that basically we had done at the time that we closed that property. So investors coming in will benefit from that good pricing that we got for it. And we have another large transaction that's lined up. We're raising additional capital so that we can complete that transaction. That property will be in Washington State. And so Oregon and Washington State are the primary focus of our acquisition plans. And we have done already, one of the transactions was in California, right next to that 4,000 acre property that we currently have as well in Fund 1.
And I think a specific question, Craig, with regard to loans that we're taking to implement our conversion, are we specifically looking at the, it's called the State Clean Water or Drinking Water State Revolving Fund loans as the source to borrow capital from?
We're just doing a grant in California, and we do a lot of work on grants. I don't know of that particular loan program, but our finance team very well may. In general, what we're doing on debt is actually buying the farms with 100% equity, and then using debt down the line to do improvements on the property. That allows us to be very capital efficient, have minimal debt on the assets. And yes, we very much right now we don't see debt being accretive. We're looking forward to it going down. One of the nice things about agriculture is that there are government subsidized financing sources such as the Farm Credit System, where they actually give us a rebate on the interest rate of currently 1.25%. Discount basically, or rebate on that. So there are some very good programs for farmland as well.
And we got a lot of questions that came in here in the last 5 or 10 minutes. We're gonna have to get to some of these and get back to you guys via email. But one last question, Craig, before we wrap up here, which is, we talked a lot about the quantity of water, and there's a question about the quality of water. Do we look at the quality of water when we make an acquisition of a farm? And as we go through, for example, our organic conversion process, what does that do to improve the quality of water, if any?
Great question. So for all properties that we buy, we test the soil, not just for normal fertility issues, but we test it for example, heavy metals and long-term pesticides. Why heavy metals? Well, because if there's high heavy metals, what that means is they put sewage on that land. And you might have heard about forever chemicals that have essentially poisoned farmland. Testing for heavy metals is a way that we have completely avoided that, and we've been doing it since we started 15 years ago. We also do water quality tests as well. So we're testing for flow rate, we're testing for minerals and micro minerals, and that's a key part of what we're doing. We're also assessing kind of the long-term stability of that water and that water right. So it's a fun process, but we're very, very thorough on the due diligence side.
So Craig, I'll turn it over to you before we wrap it up here, but just I'll answer one last question that was asked. Are we the GP that gets the 20% incentive fee? The answer to that is yes, and also the general partner invest in each one of our funds as well, Fund 1, Fund 2, and Fund 3. So again, for those of you that asked questions here late, we're going to get back to you via email. Craig, last words here for the group.
Thank you so much for listening to us talk about water. We love farmland. We love water. It's a really fun asset class. Our investors come out to our farmland each year. So if that's something that you're interested, you're welcome to join us. There's really something wonderful about actually seeing that farmland. Water is the kind of unsung hero of our farmland investment fund. It's a little too complicated to talk about in kind of our normal story about buying farmland, but it is a critical and wonderfully important asset class. We think it's the asset that's the most mispriced. And so we like a good deal. So we're looking at buying great farmland where we can get that super high quality water right very inexpensively. And we do believe that's going to pay off over the long haul as well. We've already seen, actually, for example, our thesis has come to fruition where water insecure areas such as the southern part of the Central Valley in California, which is a large agricultural producer, running low on water. And those farmers are actually going up to Oregon and Washington to buy farmland so that they can continue to grow the tomatoes and the carrots and all the other crops that need to be grown each year. So you're already seeing a water migration of these farmers. We think that's going to get much more significant over time. And we think that's a big tailwind for what we're doing. So anyway, if you have any other questions, we'd love to talk with you further.
Yep. Thanks to everybody for participating today. And as Craig mentioned, if you do have further questions, irteam@farmlandlp.com. Send us an email and we'll get back to you right away, and we will respond to the questions we didn't get a chance to get to today. Thanks, everybody.
Thank you.